In the long term, autonomy we think is going to just drive volume through the ceiling next level, and our sort of future robotaxi products, dedicated robotaxi products, we think have like quasi infinite demand. The way we're going to manufacture the robotaxi is also itself a revolution. And so it's revolutionary design made in a revolutionary way. It'll be by far the highest units per hour of any vehicle production ever. So we're very excited about that.
Earlier this year, Ark Invest CEO Cathie Wood made a very bullish prediction about Tesla, and today Elon Musk seems to be confirming this prediction. Tesla bull Cathie Wood and her firm Ark Invest recently released their projections for Tesla's future stock performance. And in this projection, Wood set a $2,000 base case scenario for Tesla's share price in 2027, a bearish forecast at $1,400, and a bullish target at $2,500. While these may seem like very high predictions, Wood gave critical reasons why she believes this, and Tesla CEO Elon Musk seems to agree with her. If Cathie Wood's predictions turn out positive, then Tesla investors should be ready to welcome a profitable future, a future pioneered and engineered by one of the most innovative companies of our time.
And it's time for FOMO, so we are looking at Tesla, which has now turned negative as we are seeing some of these. I was just looking at the NASDAQ, the Dow at session lows here in real time. Tesla has reversed its gain, although it's still up 10% this week. So it's still pacing to be the best performer in the S&P 500, at least this week.
I'm just comparing it to some of the other names that we throw in the bucket with it sometimes. You look at a name like, let's say, AMD down 4.4%. You've got Meta Platforms down 3.5%. NVIDIA down 3.6%. So hey, down 2/3%, let's call it. Not so bad when you compare it to some of its peers in that mega cap tech world.
No kidding. And the fact that it's been able to cling on to a double-digit percentage gain this week, it's now extending its third straight winning session here. It was extending its third straight winning session here before then reversing in real time. But what is interesting to me to tie together the UAW strike with all things Tesla, analysts are saying that Tesla could be the big winner here of this deal. The Detroit Threes have already struggled pretty notably with their transitioning into becoming more EV focused.
One of Ark Invest's most anticipated Tesla projects, and probably the first on their list, is the Tesla Robotaxi. In a recent note, Wood and Ark Invest predicted that Tesla's robotaxis could bring in as much as $8 or $10 trillion in revenue by 2030. The firm predicted that Tesla's robotaxi business could contribute up to 67% of its expected enterprise value, and about 64% of its expected EBITDA in 2027. It also expects that Tesla's EVs will contribute 47% of revenues in the same year, despite having substantially lower margins than robotaxi revenue. While it may be difficult to estimate what exactly Tesla's figure is for a return on its robotaxis, some analysts and experts like Cathie Wood have started to make predictions. Even though these estimates are varying pretty widely, some of these analysts suggest that robotaxi services could generate billions of dollars in annual revenue for Tesla. Hey guys, welcome back to Tesla Tomorrow. During Tesla's second quarter earnings call in July, Elon Musk said that its dedicated robotaxi will be a revolutionary design in a revolutionary way. To further drive home this point, the Tesla CEO claimed that the vehicle will have, by far, the highest units per hour of any vehicle in production ever. In his words, this will be the product that makes Tesla a $10 trillion company, and it will have people talking about it in this moment for hundreds of years to come. You see, predicting exactly how much Tesla can make from a robotaxi service, and if it becomes a reality, it's both a complex and speculative thing to do, as it depends on several variables including regulatory approval, technology development, market adoption, and competition. However, we can outline some key factors and potential revenue sources to provide insights into the revenue potential of Tesla's robotaxi venture. In the course of this video, we're going to consider a few of these factors and the roles that they play in bringing the robotaxi platform to life. Let's get into it. But before we do, if you like this type of content, hit that like button, subscribe, and turn on post notifications to keep up to date on everything going on with Tesla. First up, the size of Tesla's robotaxi fleet would be a significant factor in determining revenue. A larger fleet could serve more passengers and generate higher earnings, and the number of vehicles Tesla deploys for this service would depend on various factors, including market demand and regulatory constraints. The thing is, regulatory approval and compliance are critical, and the timing, as well as the extent of regulatory acceptance, would affect when and where Tesla can launch its robotaxi service. Tesla's robotaxi platform aims to enable Tesla vehicles equipped with FSD to operate as self-driving taxis, picking up and dropping off passengers on demand. And by tapping into this sharing economy, Tesla's robotaxi platform could significantly reduce the cost of vehicle ownership for Tesla owners. This platform has the potential to create a new revenue stream for Tesla. The earnings generated by the robotaxi platform could offset the cost of the vehicle itself, making Tesla vehicles even more accessible to a broader range of consumers. Just think about the millions of Tesla vehicles on the road that could be earning money for their owners, and in turn, for Tesla. The truth is, Tesla's robotaxi platform isn't just about ride-sharing, it's about data collection, and that's where things get interesting. The more Tesla vehicles operating on the roads means the more data Tesla can gather to refine its autonomous driving algorithms. Tesla would collect valuable data from its robotaxi fleet, which could then be monetized through various means, such as selling insights to third parties or using it to improve their autonomous technology. This data advantage could solidify Tesla's position as a leader in autonomous vehicle technology. Cathie Wood is a big fan of the stock market, and her flagship ETS has made many investors millions in the past, as she is constantly on the lookout for the next big thing on the board. You see, Cathie Wood did not just give her predictions for Tesla stock without reason. In fact, according to her, Tesla's robotaxi, or driverless ride-hailing, segment could make up to $200 billion in revenue by 2027, and this is even in a bearish scenario. ARK estimates that by 2027, Tesla will be generating $1.02 trillion in total annual revenue, 25% of which is going to come from the robotaxi segment. It also predicts that since robotaxi's business could actually be an incredible source of growth, it's going to make up to 58% of Tesla's $6.1 trillion in enterprise value at that time. This prediction from Ark Invest shows that the firm has grown increasingly confident that Tesla will launch a robotaxi service soon. We believe that Tesla is more diversified than any other pure-play car maker, and if it does unlock as much value as Ark predicts over the next few years in autonomous vehicles, its stock price could soar the firm to a price target of $2,000. According to Ark Invest, this would be the most valuable piece of Tesla's entire business. By taking a critical look, you'll realize that there are several ways that Tesla can benefit from this business. First, Tesla can make collaborations with other companies like ride-sharing platforms or delivery services, thereby creating additional revenue streams. And similarly, Tesla might license its autonomous driving tech to other automakers, generating revenue from technology partnerships. Tesla could even take things up a notch by offering premium features or software upgrades for passengers, which will definitely be a solid source of revenue. Ultimately, Tesla's success in the robotaxi space will depend on its ability to address technology and its technical challenges, secure regulatory approval, manage operational efficiency, and compete effectively in a rapidly evolving market. If these factors can align, then Tesla's robotaxi venture could become a pretty significant revenue driver for the company. But what do you think? Let us know down below. And if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.